What's going on, guys? Today we're going to cover some intermediate tips for traders who understand the basics, like beginner tips, like support and resistance and a lot of the beginner concepts. But today I want to come on here and talk about some more intermediate techniques, some tips I have, some tricks I have, because a lot of people, after they learn all the beginner basics, they can end up getting a little stuck in the intermediate part, because that's where things start to open up and you could go multiple different directions of the style you want to trade. So sometimes people can feel lost once they hit that intermediate zone. So let's get in the video. So you may or may not have noticed, but I usually have this volume profile, volume, and simple moving average up in the left hand corner there. Usually I have it toggled off, and that's because the first tip is going to be talking about confirmation. Now I know you might be able to put confirmations into the beginner section. I wouldn't necessarily put it in the beginner. I'd say it's definitely more of an intermediate thing, but most people don't realize just how important confirmations are. There would never be a case where a confirmation would be a bad thing. Even if a confirmation is the reason you don't take a winning trade, most of the time, or a higher percentage of the time, confirmations are going to always increase your win rate, and most of the time it's going to prevent you from losses rather than prevent you from wins. Obviously, depending on confirmation that you use, confirmations are going to help you a lot. And up in the top left hand corner here, these are some of my indicators that I like to just use as a last resort, kind of when I'm done my analysis, just to make sure to add some extra things on, just in case, just to give me that extra edge I need while I'm trading. So for example, this one isn't necessarily a confirmation, but this can help you a lot. If you add a volume profile, it's very good for a lot of traders who are starting to get to that intermediate level. Most people are always looking at volume as a vertical thing. Lots of volume in this section, lots of volume in this section, lots of volume in this section here. Like, that's great and all, but this doesn't really help too much, because like a lot of the volume is going to be, right around that New York session. As you can see, 9, we got 9, we got 9, and that's EST time. So that doesn't really help too much, but volume can help just to show you when the momentum is kind of dying out a little bit. But more importantly, volume profile is really great because it shows you where the major volume is on a horizontal level. That is going to help you significantly, because as traders, we're not necessarily trading vertically, we're trading horizontally most of the time, because we want to know where things are going as time moves on. So volume profile can help a lot with that. My settings here, I like to put 500 bars and then row size 100. So row size is just going to show you that in here there's 100. If you change that to 200, it's just going to get a little bit smaller. I did 20. I did 20. So obviously less is going to, give you less bars, and 200 will give you more bars. It's going to take a minute to load that, I'm pretty sure. I guess you can't do 200. That's probably why I don't have it on 200 then. But I like to keep it 100. Just it gives me the most clear, defined areas. And I'll show you what it's useful for. So this is the reason I bring this up. This is the first step here. If you want just that extra edge, add a volume profile. This is my, one of my first major tips on this video. It's going to help you tremendously. Let's just go to a random pair, go to US 30. What we can do is replay mode back to here. We'll turn on volume profile, and all we'll do is we'll mark kind of the major spots where price is pushing out a lot. And this is just rough, right? So like we have a lot of volume here. We have a lot of volume there. Even we can mark here, we have a lot of volume sticking out here. So you want to mark kind of where the highs are of the volume profile. We can even mark this 1 bar right here. It's nothing major, but good area to mark anyways. And we just turn it off. We'll turn off replay mode. You can see just how the chart actually interacts with these zones. So as you can see, it's using this as a resistance, this as a resistance here, coming up, tapping into this as a resistance here, that as a resistance here. this a resistance here, and now it's using this as a support. So you can see just by adding just a simple indicator, this is already going to help give you that edge you need. So let's say you were looking to take a sell at a certain point. This could be your confirmation to not only use maybe your own support and resistance that you marked out, but the volume profile can give you that extra edge. So if you want to add it, you just come up here to indicators and then search volume profile slash fixed range. That's very simple to add. So my next intermediate tip is, I would say, this is still under the category of confirmations and adding those extra indicators. Add a simple moving average. It's going to help you a lot. You see volume up here. I don't really use volume. I don't know why I still have it up here. I think I used it for a video, but a simple moving average is another thing that can give you extra confirmation. And there's multiple ways of using it. You figure out what you like to use it for. Personally, though, I think the best way to use it is to see when price is either oversold or overbought, which basically means that price could be in an extreme high or an extreme low. And usually when that tends to happen, you typically start to see a reversal. So the further that price is away from the line, the more we typically like to see some price action happen to show us that price is going to buy. That way we know that since price is way under the blue line, we're going to see it most likely have a high reversal off of that. But it also, you can't just use this like that alone. You have to see some price action. So that's typically when I like to see price, for example, break a lower high while we're still under the blue line. If that happens, that's super bullish, and normally you'll see quite the increase on price. For example, like here, we had a lower high here and then price broke it. This was above the line, so it's not as bullish, but if you ever see it below the blue line, it's going to be a very bullish move. Another thing you can pair it with is, like even just pairing the volume profile with the simple moving average. You could set yourself some simple rules, like when price is above the blue line, we know that price is overbought, so we should see some movement to the downside. So you could wait till price is above the blue line and maybe it hits some resistances that you've set with your volume profile. So for example, every time it's hit one of these lines while it's above the blue line, it normally has a nice little pullback. So you could get some good trades just off of that alone. But yeah, so that's the first kind of major category of intermediate tips I have. Confirmations are everything. Add them. If you aren't using them, always try to find new ways to add onto your strategy in terms of confirmations. This is always going to be something that's going to help you. It's never necessarily going to be a bad thing unless you just have some horrible confirmations that just don't make sense. There's many loads of different confirmations out there. This just being a few of them that I like to use. So if you want to add them, go ahead. I think they're great. Let's get on the next tip. So this was more of a technical tip that you can see visually, but the next tip here, we're going to talk about something a little more in depth. It's not necessarily a technical thing, but something you just start to develop. So let's get into that. So the next thing I want to talk about is becoming a boring trader. I know, as a beginner, trading's very exciting. Trading's very fun. You want to hop on the charts and just trade everything you see. But there's a real significance and an importance to making trading become boring. And you gotta have balance. It can't be necessarily like super boring to where you hate it. You still gotta have a passion for it, but you want to make it where the less emotions tied up in your trades, the better. And when it starts to become boring, not super exciting, that's where you're going to start heading in the direction of profitability. Because if you're still getting super excited about all your trades, that's how you know your emotions are wrapped up in every single trade. You really want trading to eventually become more of, a robotic thing where you're just setting it, you have your goal, you have your take profit, your stop loss, and you're letting your trades play out. You don't want to be super wrapped up in it. And especially over time, over years of trading, you'll eventually get to a point where it's just a normal thing for you. And that's where you'll really start to shine in your profitability, because it comes down to just having your strategy be a very systematic thing. But in the beginning, when you're super excited, it can be a little more varied and you can start trading very random and just having your emotions attached to everything. It's fun and it's good to learn like that in the beginning. But after a while, you know, when you really want to start becoming profitable, you gotta find a way to make it just a little bit more boring. It's gonna help tremendously. And there's a couple ways of doing that. The first is starting to practice trading systematically, you know, having your trading rules, your strategy, and sticking strictly to that. Something that can also help is not paying attention to the charts constantly, you know, giving yourself a certain time that you're going to trade. Maybe it's between, you know, New York session open and your cutoff could be 1 p.m. Only trade those hours. Make sure to stick within those. And then once that's done, don't watch the charts until the next day. Sometimes you can save yourselves a lot of losses because later, you know, I'm sure a lot of you have noticed you get some really nice trades in that New York open session, but when it starts to die off, things start to not go the same. So that can really help. Let's go back on the charts. I'm going to show you another intermediate tip. This is more of a technical thing as well in the charts. Okay, so before we get on to this next tip, another thing too, if you're using the wrong broker, sometimes that can affect your trading, especially as a beginner, if you haven't really locked in a good broker that you want to work with. But as an intermediate trader, it's better to maybe even move on from a broker that you might necessarily not be liking and go for something a little more stable, something that has better benefits to offer. And for me, that was Fintura. If you guys are interested in looking for a new broker, Fintura is going to offer you a great spread, great benefits. You know, sometimes spreads up to 0 pips can be great, especially when you're trading those high volatile pairs that you just want to get in exactly where you're entering. You don't want to be taken advantage of with the spread. Sometimes it will eat into your profits. It can already be hard enough sometimes, you know, scalping and trying to make just those couple pips, and then you're getting robbed by these giant spreads. You want to trade with somebody a little more secure and reliable, and for me that's Fintura. So I'll have a link down in the description if you're interested in signing up with a broker. You know, maybe you want to switch, maybe you don't have a broker, maybe you're looking for a new broker in general. Go ahead and try them out. You know, they're really simple and easy to sign up with. You can start trading real quick, fund your account with crypto. And yeah, so if you're interested in signing up with Fintura, I'll have a link in my description. And let's get on to the next tip here. Okay, so a lot of beginners are sometimes too wrapped up in looking at the charts and the technicals of everything. But something really important is, you know, a lot of the times behind every pair, there's a lot of other factors that can affect the charts. Such things are, you know, inflation rates, world news, just things that are happening outside of the chart itself can affect the chart. You know, things like wars, things like big news events, inflation rates, rate cuts, all sorts of things can affect the chart. You have to pay attention to them, not necessarily pay attention to them 100% of your attention, but you got to make sure to have balance. You can't just trade off the chart alone. You got to understand a little bit how the market flows. So it's really important as an intermediate trader to start having a little bit more balance into your trading and understanding that the chart isn't just affected by a trend line, that there's so much more to it. And if you can at least tag along a little bit and follow the journey of some events that happen outside, it can, you know, help you tremendously. So first thing you can do is open up a new tab and enter economic calendar, and that will give you a lot of the bigger events that are happening that can affect, you know, each and every crypto pair. You know, if there's US news that's coming out, that's going to affect the USD pairs, so that's something you want to pay attention to. But if you're a little bit lazy and you just want to get some of the major stuff, something simple you can do is, you know, on TradingView itself, you have these little things right here. You have these little economic events, and they make it really easy for you. They tell you exactly when it's going to happen and how important it is. So if you see some ones on the chart here that have red on it, those are going to be, you know, pretty impactful news. Sometimes it can be super impactful. Sometimes it can just be a little impactful. But either way, it's really important to understand when these are happening and how it's affecting the charts. So for example, we have retail sales coming up at 8:30 on March 14th. It's really important to know in 2 days at 8:30, you gotta watch out for this. Normally I don't trade until around 10 a.m. so this isn't gonna affect me, but it's important to make mental notes of this, because if you happen to be trading at 8:30, you might enter a scalp. That scalp trade could shoot straight down in your take profit, or even faster before you even have time to set a take profit. So it's really important to pay attention to that. And if you're lazy and you wanna do it just a quick, simple way, it's already here on the charts for you. If you want to go more in depth, you can search up economic calendars get a better view. Okay, so we're gonna get on to the last tip here I have for intermediate traders. I don't want to take up too much of your time, but I did feel that these are some of the important things that can help you just bring you to that next level as an intermediate trader. So let's get on to the final tip. So the final tip I have for you is gain experience. And I don't mean just trade. And you have to train. You have to train as much as you have to trade and gain experience. You have to train and gain experience too. And Forex, that comes in the form of backtesting. I think backtesting is very undervalued to a lot of intermediate and beginner traders. And to get to that next level, backtesting is very important. It's how you're going to learn without losing money, first of all, but it's also how you're going to put the hours in to grow your Forex muscles, basically. You know, outside of when you're actually trading, how else are you supposed to learn? Backtesting will do that for you. You know, so obviously, you know, so if you have, you know, the pro version of TradingView gives you replay mode. It's very simple to do, but even if you don't have replay mode, when I never had replay mode, something simple you can do to backtest is you can just scroll back and hit your arrow key on your keyboard, like the right arrow key. As you can see, it shows you bar by bar, and you can use that as your replay mode. You know, there's things you can do to backtest, but backtesting is very important and it's very undervalued for a lot of beginner and intermediate traders. And I feel like that's something that can bring you to the next level. You know, it's how you gain more experience without just having to wait around all day for your New York session. There's 1,000 New York sessions that you can practice with, you know? So when you're not looking at the charts for trades, you can be practicing without having to lose money, first of all. And it will get you more comfortable and give you that experience without having to wait every day for your session. So yeah, that's the final tip. Hopefully you enjoyed this quick video, and hopefully it will help you out.